now. So a phenomenal run. Gautam Sinha Roy is now joining us, Executive Vice President and Fund Manager at ICICI Prudential Life Insurance. He's with us to take some questions. Gautam, good to have you with us here. Thank you very much. Just a quick sort of broader sense on how you're looking at it. Many fund managers we spoke to lately were kind of the view that maybe we get a bit of a consolidation, we get perhaps some time correction, preference for large caps over small caps, mid caps. But just look at today's market, and it's kind of symptomatic of with the kind of markets we've had, which is just an up and up kind of market with mid and small caps actually leading, and large cap actually continuing to lag. Is it possible, Gautam, that we continue to remain in this kind of an environment for some time to come?
Hi, good afternoon. I think you're absolutely right, Prashant. There is a dichotomy. But, when you really delve deeper, you see the earnings story in India, the way it's panning out. At least I have not seen in the last couple of decades that I have been investing in India, this kind of broad-based and sustained earnings trajectory. You cut the earnings of the last quarter any way you like, right? Be it by market cap, be it sectorally. I mean, it's a very strong earnings trajectory, probably close to 30% broad-based earnings growth, closer to 20% EBITDA growth. And, within that, the only clear sign is the domestic cyclicals are delivering growth, be it banks, auto, real estate, and all. And the global cyclicals, most importantly, IT, and to a much lesser extent, I would say chemicals are not doing that well. So that is the story of India. And honestly, is it wise to fight this earnings? Probably not, because as long as the earnings trajectory is so good, and I'm told this is the best in the world, right? And by a margin. So if that's the case, then there's no point fighting it too much. Valuations, we know, can get overstressed in the short and medium term. So that is not something that really matters so much in the short term. But of course, we should not forget valuations. We should not forget the fact that on the mid and small cap side, there are pockets where valuations are rich. And if you look at Nifty valuation, they are probably trading at close to 5-year averages. So valuation from that perspective doesn't look like a concern. The third angle is liquidity, the domestic flows that have built up momentum through the different channels that are there. That's very strong. And I think given the conditions, the only advice I can give investors is to continue doing the regular investing through mutual funds or ULIP the way they are doing, the structured regular investment. Maybe if they want to go for a bigger lump sum amount, they can wait for a correction. But one has to, respect the earnings momentum that India has seen.
No, that's a fair point, and it's one that's well taken. Gautam, hi, season's greetings to you, Surabhi here. Since you mentioned that obviously valuations are a bigger concern, I think in the mid-cap market specifically, where sectors and stocks have really run up. Now, real estate is one such pocket. I mean, even today, the Nifty Realty Index is the best performing index of the day. And that's been the case for the last many weeks and months as well. What's your view on this sector? Would you look at any fresh allocations, and how do you find valuations here?
During the days of COVID, some astute India strategists called out for a real estate cycle to begin. And this was after 8 to 9 years of lull in Indian real estate. And see, this is a very long cycle business. Many things have fallen in place, most importantly, RERA probably. And if this is probably the third year into the cycle, and when you look at the projected demand and the projected supply, you don't see any cause of concern. Interest rates are still on the higher side, but we are at the fag end of the rate hike cycle, so probably rates come down next year. I don't see any causes of concern there. In fact, I would think that there could be opportunities in some of the smaller developers which have good balance sheet and good corporate governance practices to really scale up their businesses in this run. Because, real estate cycle, if it sustains for another few years, that would mean that the biggest delta will happen in so many of these companies. So again, another sector, domestic cyclical, which has come back ferociously. And while the initial up move might look to be too ferocious, but if it's just midway or less than midway through the cycle, then we have ample opportunity to make a lot of money there.
All right. Hi, Gautam. Good afternoon. Nigel on this side, and good to see you. And it's a good point on real estate. What about banks and financials? If I look at the performance year to date itself, banks and financials have underperformed. And I'll tell you what, earnings over there have been good. And they could be better than the rest of the market as well for the rest of this year. Is it time now for banks and financials to perform in line or outperform what the Nifty does?
Yes, for sure. You should continue nibbling into the banks and finances. And for the reason that you mentioned, Nigel, that clearly the earnings cycle is favorable there. There have been concerns. So I'll broadly highlight the two concerns. One is the NIM cycle. Last year we had an abnormal increase in NIMs. Now that is sort of correcting itself. So people are wary of some of these banks where the NIM correction is happening in a sharp way. We have another large bank where some of the merger-related issues are playing out. So, these are two specific factors because of which some of the larger banks are affected. But if you look at a broad-based universe of banks and include some of the NBFCs there, they are doing fine, even as stocks and definitely so as companies. So again, another sector where the larger names will probably continue to give you opportunity for the next couple of quarters as some of these technical factors of NIM and other issues play out. But definitely, if you're betting on the India story, that's the best way to play from a 3-year perspective, simply because A, all these banks are past their credit cycle issues. B, we also have an opportunity of re-leveraging up of the corporate balance sheet, which is one of the most deleveraged corporate India balance sheet we have seen in a very long time. So these two are very potent forces that are going to play out over the next 3 years. Of course, when we talk about the future, we assume certain things, but we do not see any risk to this hypothesis as of now.
Okay, got that. Just quickly highlighting what else is going on, because there is a lot going on, and I think makes sense to just highlight some of the stuff, right? Maybe if you can pull these intradays up. So iShares, of course, we've highlighted. Manappuram is another one which we've been highlighting since the morning. But look at something like an Angel One, 5.5% higher. That'll come up on your screen. There is Gabriel India, which is up about 12%. Gabriel is at about 410. Should be up in a bit. Phoenix Limited, 6% gain. These got humongous volumes, all these names. Chennai Petro is up about 8% or so. So stocks at about 632. There is Welspun India, which is up 6.5%. Oberoi Realty is up about 5.5 odd percent. Just going down the list with volume-led gainers. Emphasis is up 5.5%. There is Network 18, which is up 11%. Stocks at about 84. That, of course, is associated with a company that sort of runs the news network you're watching. We got Motilal Oswal Financial Services at 1,200. Stocks up 6%. TV18 Broadcast, again, a related company, 6%, 6.5% higher. Nesco is up about 6.5%. And I've barely scratched the surface with these 7-8 names, because the list of big volume-led gainers is quite a bit longer. Bikaji should perhaps come up on your screen, 5.5% there. There is Dodla Dairy, which is up 9%. Ahluwalia Contractors, 12% gain right now. DCX India, that is up, I think, some 10% or so. So there is enough and more down the list which is buzzing around. Gautam, have you put money in any recently listed companies? We had this protein which got listed. I mean, the NSDL company, which does a fair bit of backend for the digital public infrastructure for Aadhaar, etc. I don't know if you've looked at that closely. Seems to be an interesting space, and those are the kind of companies which also have done very well. Tech, digital. Any thoughts at all?
Yeah, absolutely, Prashant. What is happening, another sub-trend in the mega trend called India that's playing out, is the digitalization especially of the financial services economy. And there are multiple small companies which are enablers of this digitalization, which sort of help customers migrate from the physical to the digital, to put it very simply. And because of the growth in financial savings in equities and related instruments, and the other parts, which is essentially payments, right, where a lot of new stuff is happening, the whole Aadhaar stack, you are getting multiple of such companies, smaller companies which are benefiting, have recently come and IPO themselves. So these are definitely opportunities one should evaluate. Of course, I'm not recommending a name here. I'm just saying as a trend, this is an important trend that's playing out in India and will continue for the next coming few years. And one needs to evaluate companies which are based on this trend.
Okay, that's a take on some of these ones. Finally, just very quickly before we let you go, leave us with your idea. I mean, we were talking mid-caps, small caps. There's been quite a tremendous rally, but which would be, say, that one pocket or two pocket that you're still convinced about with respect to growth and prices haven't run away too much?
Well, one thing I have to point out, Surabhi, is, when I talked about the broad basing of earnings, mid caps and small caps, especially very, very noticeable there. Not only the strength in the earnings of mid and small caps, but the broad basing, the number of sectors that have come up, and especially in the post-COVID world where we are, and many people expected that, this is a post-COVID flare-up and things will settle down, like sectors like hotel and transport, for example, or some of them have. For example, consumer discretionary broadly is one sector where things are much more cooler now, including both the consumer discretionary product as well as services like QSR. But, it's easier to name a few sectors which are not doing that well. It's more difficult to say these are the only sectors that it's very broad-based, right from real estate to anything related to real estate like hotels, transportation, another sector, I would say. Some of the old darlings like chemicals are not doing that well. Hospitals are doing very well. And there are a multitude of such small sectors. We talked about some of the financial enablement plays. Some of the e-commerce plays have done well. There were a lot of, people were circumspect about those business models. And now we are seeing profitability come into play. So, yeah, it's a stock pickers market and there's plentiful of opportunity out there. In fact, from portfolio perspective, you also should heed that fact that there is a broad basing of earnings and probably makes sense to have a more broad-based portfolio rather than have a very concentrated one in these kind of markets because you don't want to miss out on large pockets of opportunity.
Okay, all right, got that, Gautam. We'll let you go on that note. Thank you very much for joining in today. You have a good rest of the day. We'll take a break on that note. On the